Good morning, Francois. How are you?
Good morning. I'm fine, thank you.
Thank you for joining us. Let's dive straight in. So, Cyber Week has been a big success in the US, even more than expected. Nearly 10 billion of sales up on Friday, which is 7.5% on last year, which was in itself a record, I believe. The market's fully expecting a soft landing, I think we can say, for next year. Does this confirm that?
Not sure. I think that you are living, those numbers reflect the fact that the US consumer is still living with a high level of saving. The excess saving rates remain very important and is benefiting from the fact that the labor market is very good in the US. What is key for 2024 is to see if the labor market can remain as good as it is right now. And recent numbers tend to show that there is a moderation in the labor market. And it means an impact on wages. Can wages continue to grow at such level, or will we see a deceleration? And saving, we know that excess saving is coming to an end. So I don't see that you can expect from those numbers, you can take from those numbers that it tells you that 2024 is going to be as good in the US as it was in 2023.
All right, that leads us to the bond market then, which is hovering around the 4.5% mark on the 10-year. Although it did overshoot to 4.37, I think, as a low in terms of yield. How do you think market investors are going to place themselves in the coming weeks on the bond market? Has this movement run its course?
Again, in the short term, I think yes. I think that there is room for a consolidation because the move from 5 to 4.4 was quite significant in a very short period of time. And you have a lot of people who accumulated bond in the course of the last few weeks. I remember that some major hedge fund had decided to turn their short bets on the bond market during October, end of October, early November. So I think that the move is done. Does it mean that we cannot go back to 4% in the coming 6 to 12 months? I think that we will go there. We will go there because I think that the economic activity in the US is going to slow down significantly from where it is right now. And even if this week we will get the confirmation of a very strong GDP during Q3, I think that from now on, there will be a deceleration in economic activity. It will support the bond market.
Let's talk about Chinese shadow banking now. Overnight, Chinese property stocks are heavily down between 8 and 10%. Last week, Zhongji, I apologize to everyone for the way I pronounce that, it announced that it was insolvent and they needed 36 billion. We haven't spoken about Chinese shadow banking since the summer. It kind of disappeared from the spotlight. Is this going to come back to the forefront now?
I think so, but I think it's in the front for many, many years, in fact. In fact, people tend to think about that problem and then forget about it, but this is a major problem. It's 2 trillion US dollar shadow banking in China. We all know for many, many years that this shadow banking was going to pose a problem. And the key issue is how do you deal with it? And there is some nervousness among the Chinese authorities right now. And Zhongji, which was the last case, is showing you that now really it's coming to a point where you need to find solution, offer solution, lasting solution to reduce the weight of the shadow banking in the Chinese economy.
Let's go to the US dollar now, which has had a terrible month. Is this a portent of a rotation from US assets into non-US assets, or is it, on the contrary, something that could attract investors into the US?
First, you need to consider where the dollar is in terms of valuation. Do you consider that the US dollar is fair value, undervalued, or overvalued? I believe that the US dollar is overvalued. So there was room for some kind of correction on the US dollar after a few months of strong appreciation that were not justified to my point of view. So I think that the US dollar need to weaken, and I remain with the view that 2024 should see depreciation of the US dollar. Does it mean that it's the end of attraction for US assets? I don't think so. I think that it could be the contrary. A weaker US dollar could give some room for foreign investors to reconsider US assets because for the time being, the strength of the US dollar has made them too expensive. So maybe a good play would be for the US to let the currency depreciate so that it can attract more capital flows into US financial assets in the medium term.
Royal Bank of Canada has joined many other banks in calling for an S&P 500 at 5,000 next year. What's your thoughts on that now?
I think that it's a very optimistic scenario. And, I even read this morning, I read a research that called it at 5,400. In order to get that, I think that you need to have, first of all, interest rates going back to 3.5% in the US. And I mean about the 10-year bond yield. I think that if you consider that, it means that you have a significant slowdown in the US economy. And then you come to the point where the market in terms of forward PE at 19 times is not cheap. And it means that how do you get to 3.5 on the 10-year bond yield, which means a deceleration, and you have a fulfillment of an expectation of 11 to 12% earning growth in 2024. Something is not adding up. It's either you have a significant slowdown and the interest rate can support the market, but you can't have both ways. You can't have an interest rate slowdown or an interest rate fall with EPS being in line with the current expectation. So I have a lot of caution towards such a scenario. It would be a perfectly rosy scenario, and this is not the one I have in mind.
Let's go to Japan now. Stocks are a 33-year high. The all-time high, I think, is back in 1989, 38,000. You called the yen perfectly last week. It's up a couple of percent since you called it to go back up against the US dollar. Can you see the Japanese stock market beating its all-time high next year?
The currency will play a significant role. Last week we had the CPI number in Japan. They were not good. They are putting a lot of pressure on the Japanese central bank to change course in terms of monetary policy and to join the other central bankers in hiking interest rates. I think that it will depend a lot on that. If they hike interest rates, as I expect during the first quarter of next year, you could see further appreciation of the yen. It could put a lid on the potential for the Japanese stock market, and so it will depend on the yen. And I cannot exclude that it's going to happen, but nevertheless, I will be very careful with the level of the yen to make a bet on the Japanese stock exchange.
Let's go to Europe now. Geert Wilders in Netherlands had a shock election result as he's forming the next government in Holland. And not many people predicted he would win to such an extent. How does that affect the cohesion in Europe, and is it going to have any effect on politics and geopolitics in Europe and therefore the economy in Europe?
I think that this event is a very bad event for Europe and for European prospects in 2024. You have a lot of things adding up lately that are going to make the situation in Europe very difficult, especially when you know that we have the European election coming mid-2024. Clearly, you can see that the far-right parties in Europe are on the ascent. You had Slovakia, you had now the Netherlands. Next year, you will have Austria. Austria is going to vote, and currently the far-right is leading the polls. So you add this far-right move, which is connected to excessive inflation on the one side, the fact that people are fed up with losing purchasing power. You can see that there is some climate skepticism rising among the electorate, and you have the problem of immigration. And then you also have to add the story of Germany. Germany is facing a very difficult situation with the decision by the Constitutional Court that the budget was not correct. Now the Germans are in deep difficulties to promote what they expected in terms of spending, investment in climate, in alternative energies. So there is a very difficult year ahead, at least politically, not to mention the fact that there is disagreement now concerning what we should do for Ukraine. There is a lot of room for political dissent, political factors that are going to add to volatility in European assets in 2024.
Quite a few numbers coming out this week. It's quite a busy week in terms of numbers. Which are the numbers you're most looking forward to?
I think that the first one to mention are, again, inflation numbers, because you will have the CPI number coming out of Europe, coming out of Germany, coming out of France. You will have a key factor of inflation in the US, which is the PCE, the Price Consumer Expenditure Index, which remains the key indicator for the Fed. And all those numbers are supposed to come down, so people will put a lot of attention to those inflation numbers. Then you will have the ISM numbers coming out of the US on Friday, the manufacturing ISM, very important numbers to see, because you know that we were kind of bottoming on that indicator. Is it going to be confirmed? You will have the PMI number coming out of China. Again, very important, because people want to see that some more positive number of the last few weeks are confirmed by the PMI. So those are the numbers I will take a close look at this week.
Coming to a few investment ideas or trading ideas, what are your strong convictions for this week?
For this week, I would say I'm more thinking about for the next few months, but I would say I think that what is interesting, first one is gold. Gold is very interesting. I think we discussed that over the last few weeks. We have broken the 2000. I think it opens the door to something closer to 2050 during the week. I think that we are going to test again this number. I am still in favor of holding gold. I will watch very carefully, and I think that the trend towards a yen appreciation is going to continue. And as I mentioned, I think that this is something that should continue in 2024. And also, I will look at the equity market with one idea in mind. As you mentioned, soft landing is quite priced in by most investors. You have some very, very positive forecast for 2024 in some targets, as you mentioned, 5,000 on the S&P 500. I think maybe it's time to consider defensive stocks. If you don't own them, if you are positioned aggressively in a portfolio, if you are lucky enough to have a lot of your money in the seven magnificents, maybe it's time for you to consider to have a defensive stock, high dividend stock, Nestle stocks, for example, in your portfolio for 2024.
What about the OPEC that are meeting this week? Are you expecting some announcement from them that they're going to reduce production?
It seems that there is an agreement that is looming, and that after a few days delay, there is an agreement. Yes, there could be some reduction, but as I mentioned when we discussed oil, I think 2 or 3 weeks ago, one of the key elements in the supply of oil right now that the OPEC Plus is not able to control it, because you have some new supply coming out of countries like Brazil, for example, and it's not a supply that the OPEC Plus is controlling. So I don't think that the agreement between the member of OPEC Plus is going to be significant. Yes, maybe it can add a few centimes and maybe $1 or $2 on the price of oil, but at the end of the day, it's the outsiders who are controlling the future of oil prices in 2024.
Francois Savary, as ever, thank you very much for joining us. See you next week. Goodbye.
Bye-bye.